Good afternoon, everyone, and thanks for joining us for our webinar today to discuss the Green Crowd EIIS investments for 2023. For those who don't know me, my name is Janine Donahue, and I work alongside Paul Brown in Green Crowd. So today we're just going to briefly run through, Paul will run through with you just a brief history of Green Crowd and what it is that we do, and then he's going to take you through the two investment opportunities, which are in Green Tech Distributors and Batterybox Technologies. Then after that, we'll do a quick run through of the EIIS relief in 2023, and then a brief overview of the changes that are coming in 2024. I will then run through the anti-money laundering requirements that are needed to invest through us, and just a brief overview of the application process. If you can ask questions throughout the webinar using the Q&A function, but we will just answer all questions at the end. The webinar is being recorded and a link will be sent to you afterwards so you can look back and see what was said. So I'll hand you over to Paul now and he'll get started on the webinar.
Thanks, Janine. Good afternoon, everyone. Thank you for joining us today. What I'd like to do is take you through this year's offerings on the EIS funding side of things with Green Crowd, and possibly for those that are just joining us this year for the first year, give you a tiny bit of a background on Green Crowd and previous projects funded. We will also be touching to a certain respect on the EIS and how it actually works, and the quite recent changes that have been introduced in budget 23, but we don't plan to deal with it in any level of depth. But again, our information memorandums that we have out there will take you through the benefits of the tax relief and how it works, and the impact of the possible changes. But just to kick off with you, just to give you a brief background on Green Crowd, what we've done, we're essentially an independent private company making private placements into the renewables and sustainability space, heretofore driven primarily off the back of EIS funding that's available. And I suppose we found ourselves creating the platform, the digital platform, as we had a sister business, SolarStream, that was actively trying to raise money in the market as an EIS potential investment house. And as a seed company, a startup company, was finding it quite difficult to raise funds through the existing mediums. So Green Crowd was born out of that in 2020, and has carried out a number of fundraising rounds through 2020, 21 and 22, and indeed now into 23. Our entire focus on Green Crowd is in the name. It's all about finding projects that are green, looking for infrastructure-based projects that have an ethos mission at the back of it all. And we tend to get involved in very early stage renewable projects, those that don't necessarily attract funding from the traditional funding sources of banks and private equity houses, and we get involved with them at day one. Our key focus, the third point on our slide, is primarily in backing those properties that are backing those projects, that they are projects that have a strong asset backing that creates a relatively low risk profile for our investors. And that tends to be our focus. So in terms of us being prepared to fund those projects, we look for sustainability, renewability, an ethical impact, and an asset-backed structure that will ensure a good underlying low-risk profile for our investors. Historically, companies that we've been involved with, for those people that have invested with us before, are SolarStream, which is now in a repayment of EIS investor mode, having repaid back its investors in 2021 and 2022, and on track to pay back the next tranche of investors in 2023. It's our first exit in that space. We've been involved in backing Bioenergy, which is a biomass project based in Tipperary, providing a form of ESCO or heat-based energy services in the renewable space to a number of nursing homes, schools, and swimming pools in Ireland. And our most recent projects are those of Batterybox and Green Tech Technologies, which we'll be going through in quite a bit of detail now in the presentation. The attraction, I suppose, for EIS investors, just to touch on it at the start, is 40% income tax relief. It's a unique product. It gives relief against all income, huge bit of flexibility in the types of income, such as rental income, etc., qualify. And our focus is on creating a mechanism that our investors receive a 40% tax relief on any investment that they make. I've touched on it already, but our entire ethos is to find asset-backed, unleveraged products. And by doing that, we generally structure it so that there's no other senior debt coming in to the actual funding mix, so that EIS investors' funds aren't diluted. So essentially, our EIS investors essentially have a project that is wrapped, that is protected from other debts or from their interest in that project being subrogated to other interested parties. And it gives quite a level of protection around that, quite a bit of management by the investors. And invariably, we appoint an investor director. From each of our investors, we appoint an investor director into each company to oversee its performance in the 4-year timescale that the EIS investment is involved in. We tend to go very much with areas that we know. A natural evolution for us as project managers in this space and as funders is to identify those projects that we're comfortable with. And both Batterybox and Green Tech are areas of expertise that we have. Again, they're in the renewable space, they're established technologies, and they're entirely asset-backed. And in choosing these projects, we always try and identify a very clear, defined exit at the end of year 4, and the projects tend to be structured in such a format. Moving on to our next slide, the first project we'd like to talk to you today about is Green Tech Distributors. Green Tech Distributors is a company that we launched in December of last year. It was launched in December of last year, and the model of it was to create a specialized PV solar distributor in Ireland, providing exclusively solar-based products for the solar PV market, rooftop and ground-mounted sector in the Irish market. And we established this in December of 2022 last year. We fundraised it. It was on the back of a number of points, which we've highlighted there. I suppose through the issues that were experienced in the Ukraine energy crisis, and the whole supply chain issue that arose in early 2022, where stock could not be got into Europe due to logistical problems throughout Europe in terms of the huge turn and focus upon alternatives to gas. And we found a situation where a lot of the distributors that SolarStream would have dealt with, one of the investment companies that GreenCrowd have invested in, not being able to obtain panels, not being able to obtain inverters, or where it ordered inverters, finding that its order was being delayed or was being redirected to other players in the market. We just felt there wasn't enough fluidity or liquidity in the distribution market in Ireland, and we felt there was a huge opportunity for a specialized PV solar distributor to enter the market and to work primarily in that PV solar space, not being a general electrical distributor, but having a specialism in that area and creating it as a Irish-based service centre and knowledge centre as well that could actually support the products. The 4 Irish distributors that were in the market, or experienced in 2022 with them, was that they were all quite limited, and 3 of them were very much UK distributors that had relocated and set up in Ireland due to a level of market expertise that they had coming from other markets. So again, a very illiquid market, a huge opportunity for independent distributors to come, and very much a burgeoning increasing supply of PV installers in the market, a huge focus on the market, both commercial and residential customers, in adopting renewable energy and specifically PV solar. So we see it's a market that allows huge potential for new entrants into the space, and for a specialist, bringing a specialist offer with service support facilities in place, being able to create a significant advantage in terms of their offering to existing PV solar installers. I suppose you've had quite a significant change in the last year in 2022 and into 2023 in the renewable sector as a whole. And the economic and environmental changes that have taken place, which I outline on this slide, not only do they apply to green tech distributors, but they also apply to the next presentation we'll make, which is Batterybox. We have a burgeoning, highly expansionary environment with the market looking to adapt quickly. The likes of PV solar, air source heat pumps, battery technology, and anything that is focused upon reducing energy consumption and finding efficiencies in that. And the government has set a very supportive environment to facilitate this in the last 2 years. We've had the government in October 2022 lifting planning restrictions. Until October 2022, practically just 12 months ago, anything over 30 panels on a roof required planning permission. So we've had the huge relaxation of the planning requirements for on-roof solar. There are a number of areas, approximately 3% of the geographical base of Ireland, those areas that are close to designated fly zone areas such as hospital landing pads, helicopter pads, and national airport facilities. Those areas still require any significant level of PV solar installation to require planning. But setting those aside, 97% of the country and 97% thus of all roofs are exempted from a requirement to lodge for planning for solar. The second, I suppose, supportive environment that has come along is we've seen a fast track approach come in by the government last year, facilitating businesses to be able to install up to 50 kilowatts or approximately 125 panels, and to be able to do that on a quick connection process, a 10 to 12 week process with permission from the grid, and a facility to support export payments for those facilities, supported by the government under an export guarantee tariff, and guaranteeing a payment for that export for 15 years. We've seen the NC8, another fast track approach that has come in October of last year, and really starting to see the impact of that this year, allowing larger plants again of up to 200 kilowatts or approximately 500 panels to have a fast track approach, being able to apply to the ESB and get permission to export onto the grid by up to 200 kilowatts. By serving notice to ESB and giving ESB time to carry out appropriate engineering studies to see that the export capacity can be handled. So you're moving from a situation that in early 2022 there was a very nominal level of activity in the whole commercial and industrial space in terms of PV solar development, to a situation now where you have a frantic relaxation of planning of the markets to enable SMEs, industrial customers, to be able to produce their own energy, and in respect of that energy that is surplus to their needs, creating a mechanism to allow it to be exported and to be paid and monetized. Quite recently, again in July 2023, we've seen the government introduce a commercial grant for the domestic sector, and this is the small scale renewable electricity support scheme. This allows any commercial business installing solar to receive a grant towards the cost of installing that solar, up to 1 megawatt, quite a significant size plant, €1 million plant, 2,500 panels, and the government providing on average a 20% grant towards the capital cost of that. These schemes, in addition to the mini generation schemes that we saw in 2022, are all creating an environment of increased continuous demand for product, and indeed for choice for product. The other, I suppose, relaxation you're going to see in 2025 is the government is in the process of developing a green tariff. Again, this will highly incentivize generators, renewable generators, both domestic residential properties and commercial rooftop solar, to be able to manage and time shift their energy load. You're going to see the government introducing slightly higher tariffs in the 5 to 7 timescale, and a much lower rate at night, and indeed a much lower rate around the middle of the day, when all the renewables and all the wind turbines and all the solar farms are on, and there's an excess of energy on the grid. There'll be an incentive there to encourage businesses to import the energy off the grid and to store it on site in their own commercial or domestic batteries. And I suppose the final point we would make is we see that it's a very limited market. There are 5 to 6 installers in the market. There is Green Tech, which is essentially set up in December and has had a gradual progressive growth over the last 9 months. And we see an opportunity for quite a bit of growth in that space for green tech. What has it done since it set up in December 2022? Well, I mean, it stepped out to initial 2-3 friendly, significant large-scale PV solar installers in respect of providing them with a supply channel for their product. We've had general commitments on a baseline of 3 megawatts of equipment and panels that will be bought through SolarStream. That would equate to about 1.6 million of annualized turnover. We've seen turnover in the first 8-9 months of this year to the end of September, coming in at 600,000. The company's had a modest turnover. It's been profitable since day one. It's achieved a gross profit on that, and is reporting a profit of 25,000 euros year to date. Nominal profit, as I said, but a profit at that versus a normal startup losses. So we're out of the traps there. We're expanding the business. We're growing it. You know, we've gone to a number of PV solar installers. We've come up with a solution that would provide them a very competitive pricing, a direct delivery from our warehouse, which is strategically located in the southeast, in the main irradiance corridor. And we've created a situation where those PV solar installer partners that are purchasing from Greentech will have very much a co-op based style of pricing with a rebate structure in place based on the volume of supplies and purchases that they make directly from us. The other thing that Greentech is doing is it's introducing a new range of products. There are a number of established products in the market at the moment in terms of panels and in terms of inverters. And there are approximately 2 to 3 inverter brands that are 80-90% of the market. A lot of these inverter brands lack localized on-site support. Most of the support comes from the UK through helplines, and there is very little levels of backup supplier expertise in terms of supporting the actual installers. What Greentech has done in the last number of months, in the last 6 months, is it's identified its own range of inverters and electrical support appliances, hot water devices and inverters, and it has taken them through the SEI EIIE listing register, which allows those projects to be registered and acknowledged as part of SEI, which allows them to be used in terms of projects that are seeking to obtain grants. And secondly, it allows those products to receive the 100% capital allowances. So quite recently, Greentech has licensed for Ireland a range of these brands, particularly a new Sunways inverter range, unlike typical brands in the market providing a 5-year warranty. This provides a fully comprehensive 10-year warranty with full aftercare support and services as part of that. We've also seen Solentech being signed up by Greentech as well, and again another range, European based range of inverters available for the Irish market. And we're introducing the whole area of microinverters. Again, the traditional method for this space, as it's growing, the solar space is growing, has been to install grid-tied inverters. And most of those are quite significant and large and are placed in the customer's plant room, or they're placed in the residential customer's attic. We have a new range of inverters coming through that can be fitted on the roof and behind the panels, and that have substantial warranties that exceed the more traditional form of inverter. Moving on. What's Greentech's current status? Well, we have 2 significant PV solar installers that are getting involved with Greentech, starting to buy the product on a co-op rebate style arrangement with them. We are launching a wider attack on the Irish market, a B2B campaign which kicks off. This is following on from the second point there. Greentech has had 1 full-time employee during the year. It's increasing those numbers in January to 3 full-time people, and we're starting to fully commercialize the business now. As I said, a modest level of turnover achieved, 600,000, small profit. We expect to lift that up to 1.6 million next year. And we're on track to bring that level of turnover up to between 4 and 6 million over the next 3 years as we fully commercialize. The website has been launched. a B2B campaign is underway. And as I said, we've actually licensed a number of our exclusive range of inverters with the SEI triple listing. So the whole operational side of that starting to gain momentum. What are we looking to do with green tech this year? Last year we raised 500,000. That essentially enabled the business to buy a substantial number of containers directly from the manufacturers, the tier one panel manufacturers, who are primarily based in China and Singapore. And the panels that we bring in are all tier one. They're all approved by Bloomberg, and they're the panels that are used on solar farms and that are required by banks in terms of bankability. So we've essentially used the 500,000 we raised last year to primarily provide initial operating capital, working capital, for the existing small level of operations we have, the staff and the development of the website and the digital platform. And fundamentally, most of the 500,000 moved into investment in solar panels. We've been selling those solar panels quite successfully over the last 9 months. And we're now moving into a situation that we're raising further working capital to allow us to increase the size of the stock that we're carrying, market penetration, and to bring in the new range of inverters and rail that we're about to start stocking. Our targeted return for investors in respect to this is 116 cent per 100 cent or €1 invested in the business. So for every pound EIS investors are putting in, the bonus anticipated at the end of the 4-year EIS timescale is €16, as well as the tax relief. The funds, as I mentioned, are going to be used primarily to purchase additional stock, and a modest amount of those funds to further develop the commercial operations of the business. We have a very steady, gradual, slow approach to this, and that'll be in keeping with our historical growth ethos in our other businesses. The nature of the investment made by investors into green tech is primarily into panels and equipment. And the final point I make in that slide is that these panels and equipment are essentially asset-backed investments, not as solid as, buying a building, a fixed asset-based project, or having solar panels in a field under a 25-year contract. But the equipment itself is all highly valuable. The values of anything have been going up in the last year. We've seen 29% on average increase across most of the materials in the space: aluminium, rail, inverters, and indeed panels. Having said that, panels are now starting to stabilize back to pre-Ukraine crisis. But essentially what our investors are getting is asset-backed equipment that is readily realizable in the Irish market, that is in demand, that's been sought after, and has an immediate resale potential and realizable value. Okay, so that's essentially the presentation on green tech. As I said, it's a follow-on funding raise round from last year. The initial seed funding was raised last year, and this is further development funding. The second project we have is Batterybox Technologies. Batterybox Technologies, again, is a project that we funded the startup capital last year, and again, we're returning to the market to raise further development and expansionary capital this year. Let's move on to the next slide. We're looking at a situation, again, Batterybox Technology is very focused on providing batteries to the SME sector, to the commercial and industrial sector, and we're looking to install battery storage solutions. A lot of the initial development in the SME sector and the industrial sector over the last 2 years in the PV solar space has been very much rooftop solar. Most of the targets for rooftop solar rollout has been focused around those customers that are going to use all of the power that is produced. For instance, large manufacturing plants that are working 24/7, and the use for battery technology has been quite limited in those plants. However, as they evolve and as the market matures, those customers are realizing their roofs are covered in solar. It might be meeting 20 to 30% of their overall energy needs, and they're constrained in what extra they can actually do because they can't get any more panels on the roof. So battery technology allows them the solution to bring in containerized batteries on a skid in a steel container, dropped into the back of the commercial premises, and essentially plugged in to the control boards, electrical control boards of the client. And that power can actually be can be taken from the grid at night off peak at lower energy rates, and it can be topped up into the batteries for use during the day. Indeed, that power can be used in the morning, and as we hit mid-afternoon where power prices are cheaper, again, that battery can be filled up again on a second cycle, and that power can be available for the 5 to 7 winter peak pricing period that has a much higher energy price to commercial and industrial users. So again, it allows commercial customers the facility to shift load and shift their demand by having a backup storage facility. So our focus on Batterybox now is to enable and go after that opportunity. As I said, through sister developments, we've had quite an established base of commercial PV solar being created in other green crowd-based projects, and we see it as a natural follow-on where we would have a product offering in the battery storage facility that we can bring back to that client base and offer a solution there. So we're looking at providing batteries as a service. The model of this is we put in the battery with a very small deposit for the commercial client, and where they use the energy savings to pay it off over a 5-year period. This was successfully, I suppose, innovated in the solar as a service model in 2019, 2020 by us, where we put in solar with a very modest deposit up front by the customer, and where the customer use their savings to pay off the asset and take ownership of the asset over a 4 or 5 year period. And we've used that model to invest EIIS investor funds in the PV solar space. So we see it as a model that we can replicate into Batterybox as a standalone company with its own employees, with its own branding, and with its own separate business plan and business objective. So again, a very solid Chinese wall between the two, so there's no conflict of interest, but being able to benefit from the promoters, I suppose, expertise in the whole renewable space to date. So we're looking at two models there: battery as a service model, where we're providing the battery as a service, and ultimately the customer takes ownership of it over a 5 to 6 year period, or a more extended model, which we're calling the power purchase agreement model. And this is where Batterybox maintains ownership of the asset over a longer life, for 15 to 20 years. And we simply charge the customer a price per kilowatt to store. So for instance, if the customer is bringing power in off the grid at 15 cents at night and is saving power at 35 cents during the day, the customer is making a 20 cent saving on time arbitrage. So the PPA agreement will simply charge 10 cents towards the repatriation or the depreciation amortization cost of the equipment, and the customer saves 10 cents a unit, being a 30% saving on its energy price, but allowing for a Batterybox to amortize its assets and make a return on capital. So essentially what we're doing is we're providing a very easy transition to batteries, and we're, as part of that, we're bringing in a slightly innovative form of management to the Irish market, to the extent that we're actually starting to work with and have reached heads of terms indeed with a UK partner licensing their technology, which is an algorithm-based technology to profile the customer's energy needs based on their last 12 months of consumption, and allow us to forecast what their energy needs for tomorrow will be. So by doing that, we will know exactly what the customer will need in terms of energy tomorrow. We'll be able to top the battery up by that, and we can look at the energy trading opportunity to be able to top up more into the battery and then provide that power back to the grid during the course of the following day, because we know that the customer, based on their historical data profile, will not actually require all of the power so provided. So that's taking us into the final point that I mentioned there, where we're looking at starting to provide a virtual power production plant, which is essentially us having power available to the grid to sell it onto the grid and provide it to the grid for grid support, or to provide it to other customers, and I suppose take advantage of that time of day pricing that is indeed there between nighttime and day rates at the moment. That's there for the larger high voltage customers and medium voltage customers that are buying power on a pass-through basis, and that will be coming through generally to the market by 2025, where we're seeing the government introducing a green rate to encourage people to take power and store power at certain times of the day, and possibly then an incentive to sell it back to the grid at alternative times. So in this slide here, we look at an example of one customer that we actually have, where, you know, the excess power that they have on a Saturday and Sunday, because they're not actually producing on a Saturday and Sunday, is going back to the grid. The government is guaranteeing a 13.5 cent to 12.5 cent for that for 15 years. But the actual cost of themselves is buying power at between 25 cent and 48 cent at various times during the course of the day. So by having battery technology in place there, to be able to fill that battery at night and indeed at weekends, it's allowing us to take an arbitrage and save that customer between 12 cent a unit and up to 33 cent a unit. Okay. What are we doing with Batterybox Technologies this year in terms of EIS investment? Very similar to the green tech model. Last year we set it up. We raised 429,000 in December of 2022. Again, we raised this from our Green Crowd EIS investors, targeting return of €1.16 per euro invested, together with the upfront income tax relief of 40%. What are we using the funds for? A certain amount of that funding has been dispersed on our trial batteries. Excuse me, a very small amount on our trial batteries that we've been actually trialing this year, and a certain amount on operational overheads as we start to develop the business. As I said, we've one employee on board consulting on that. We're reaching a heads of terms in terms of a licensed partnership with time of day technology, licensing software in the UK, and indeed an organisation that has 60 megawatts installed across 120 sites. So huge credibility there, huge supporting back office support to us from this partnership. And we've been using some of those funds, less than 30,000 this year spent in that space. Fundamentally, a lot of the money's now available for disbursement into our trial batteries, which we expect to start installing in the January-February timescale. We're returning to the markets to raise further funding. Obviously, we want to reach critical scale on this. Janine will talk about overall figures, but we're trying to get 1.5 million raised in this space, very similar to when SolarStream was launched. We want to get a critical mass, demonstrate the product, so we can then return to the markets from more traditional funding to support the rollout of the assets. But I'm very much looking to raise between 500 and 1 million this time around, and just give it a fair bit of momentum to get quite a lot of batteries out and trialed. Again, the assets, they're asset-backed assets. They will be predominantly containerized. Certain of them will be in tower structures in the client's premises. In the event of any risk or default, those towers and indeed the containers are very movable and can be reused, can be brought to alternative locations, alternative customers, and help us realize or overcome any issues we might have there. The nature of these batteries have come on quite a bit as well. Batteries that we're actually licensing essentially have a 6,000 cycle. And what a 6,000 cycle means is that if you are charging them and discharging them once during the day, they have 6,000 cycles. A cycle per day over 365 days of the year will give us the equivalent of a 15 or 16-year life on these assets. They all carry a guarantee of a lifetime guarantee of 10 years. So the cycle life is much higher than that. And all our modeling with our customers are based around a repayment for the asset over an 8 to 9 year time frame. So again, a lot of the assets amortize before their warranty runs out, and indeed we have a life of 7 or 8 years beyond the warranty, where these assets should be generating income for both companies. EIS tax relief, just to touch on the EIS tax relief and I suppose upcoming changes that are there coming out of the budget 2023. Again, as I said, we have essentially two projects. They are startup projects, they are renewable, they are asset-backed, and they attract the 40% income tax relief. That relief might change in 2024. So what you have this year is you have the investments that you make into either Batterybox or green tech qualifying for 40% tax relief. This is offset against your income arising in the year, and the process has been very simplified in that most of the RIC certs are issued in the first 4 months immediately after the year end now, because of the simplification of revenue rules. This year, an individual can invest up to 250,000. The EIS investments are subject to a 4-year holding period. We generally bring our investors in December, and we try and exit them 4 years and 3 months after that, as we get into that you have to get over the 4-year hurdle, and we have to have the refinancing in place for it. So we generally try and exit those investors in the 3 months immediately after the 4 years. And as I touched on the very bottom of it, as I've mentioned, and Janine organises these statements of qualifications they tend to issue within 4 months of your investment being made. So pretty fast track approach. They are specific investments into companies. There's not delays that might occur if you're going through a designated fund where you have multiple investments, and they might have to hit certain criteria. So once we satisfy the criteria, once we're up trading and investments made and spending, we get to issue those certificates. Changes to the EIS relief that you're going to see in 2024. Again, this has been brought about or has been discussed in the budget of 2023, and the finance bill is allowing the enabling legislation, which will be implemented next year. But you've seen quite a bit of adjustment in the EIS relief to bring it into harmonisation with general EU requirements. There will now be different eligibilities for companies. So not all companies will qualify for a 40% income tax relief. So what you're going to see next year is those companies that would primarily qualify for the higher relief, the 40% relief, and indeed 50% relief, will be those companies that are essentially startup companies. You're going to see a general broad relief available of about 35% on those companies that aren't just complete startups, companies like Green Tech or Batterybox are into their 2nd year of trading. You're going to see relief available in those companies at 35% in their 1st year and at 20% in any subsequent years. So you're going to see quite a stratifying or change to the legislation coming next year. Now, there is a plan to carry out a full review of the EIS legislation in early 2024 by the government. So indeed, there could be some modification or changes to this. But I mean, the government has marketed some very positive changes to it. An individual now, rather than just investing 250,000 in any one year, can invest up to 500,000 in any one year. A lot of the profiles of our investors in Green Crowd, we have very few at that upper level. Most are in that mid-range of 20,000 to 50,000 investment. And indeed, we have certain customers in around the 10,000 mark. So again, this upper limit won't really affect them. But, you know, what is affecting what is possibly changing the motivation amongst the EIS investors will be the restriction of the relief from 40% to 35% next year. So again, if you are considering I suppose a serious investment over the next couple of years into EIS, whether you want to try and focus on the fact that you have 40% this relief and possibly adjusting reliefs next year. The other major change that has come out there is under the current proposal, it'll be only fully high risk ordinary shares that will qualify. So the concept of preference shares, redeemable shares seems to be there for change next year. Again, EIS continues to be subject to a minimum holding period of 4 years, and there is a full review of the EIS expected in 2024. So when that actually happens, we will circulate all our investors with an up-to-date newsletter on the changes and the review carried out by the government and the impact on that for your investments in 2024. But I suppose I'd be urging you just to take advantage of the opportunity there this year, where there's certainty of the 40% relief to make your EI investments this year. Moving on to the next section, the anti-money laundering side and the whole timescale around investments. I'm going to pass over to Janine to take you through that. I'd like to thank you for your time. I will return at the end of that presentation, and I think Janine may have a list of Q&As that have come in. I'm quite happy to take any questions for 15-20 minutes at the end of this process. So I'll go to mute and I'll hand over to Janine there. Thank you.
Thanks, Paul. So I'm just going to run through the anti-money laundering requirements that are needed to invest through Green Crowd. Now, for people who have invested with us previously, you don't need to supply any of this unless your address has changed, or you got married, or your name has changed, or anything like that. We should have copies on file for you from previous investments. But for new investors, you will need to supply a certified copy of your passport or driver's license, and this needs to be signed, stamped, and dated by a solicitor, a commissioner for oath, a Gardaí, an accountant, or a bank manager as a true copy of the original. It's fairly standard procedure for most investments. And 2 forms of proof of address. These need to be from different sources, dated within the last 6 months. These can be e-bills from the internet. We know, like, not many people get paper copies anymore, but they do need to be from different sources. So say ESB and a gas bill or a bank statement or something like that. Just to note that mobile phone bills aren't accepted. And also we just need proof of your PPS number for revenue reporting purposes. So this can be in the form of a pay slip or a letter from revenue, and this needs to be dated within the last 12 months. If you have any questions on any of that, you can just contact me here at the office. So just to recap on everything that Paul has discussed, we're looking to raise around 1.2 for green tech and 1.5 for Batterybox. The minimum investment we ask for in Green Crowd is €10,000. Now this can be invested into one of the companies, or if you want to split that in any kind of way across the 2 companies, that's also allowed. Looking for provisional bookings to be made by the 1st of December. We're expecting a kind of flurry on this as the relief is changing next year. So if you could just get in any provisional bookings by the 1st of December, we will allocate shares on a first come, first served basis. So please, if you are interested, please let us know by the 1st. Investments will close, if not full beforehand, on the 29th of December. So by the 29th of December, you need to have your paperwork back to me. And I suppose the most important thing is to have the funds transferred prior to that date. There was a couple of issues before where, if it's a new bank account that you're transferring to, it might take a couple of days to transfer the full amount. So please make sure you allow enough time to have all the money transferred by the 29th, so it's all eligible for the tax relief. And any questions, you can just give me a shout in the office, and I'll just open up the Q&A now. I'm just going to stop sharing the screen, and we'll have a look at those questions now.
Just coming in there again. So Janine has shared the screen there of questions that we have there. So just to work through them there. Paul has asked that the webinar is being recorded. Can he share that with his clients, with his prospective clients? Yeah, that's totally fine. Paul, you might actually, just as you share that and share your link, if you could please maybe possibly send on the details there to Janine for follow up with them, obviously through your own wealth management house. I suppose the other side of it is Green Crowd as a platform. It's a digitalized platform, so any of your clients can actually link on there directly, register, complete our risk assessment, and get immediate access to a copy of the information memorandum, the last year's management accounts, financial statements, everything like that. There's a whole tiered level that Janine can give them access to their, Paul. So what you can do is you can actually get them to send on the recording, and by all means get them to register online directly with Green Crowd and get immediately into the data rooms on that. Neve has asked me, she's saying you're working with a number of multinational firms at this time. Can you give us a flavour of the type of companies that Green Tech has onboarded? Well, hopefully I've touched on those, Neve, since I started the presentation. The tier 1 panels that we generally work with, we are Suntech. We've had a relationship with Suntech for over 2 years at this stage. They're a German-based engineered panel that's manufactured now in China. Again, it's tier 1 panels in the top 10 of the tier 1 panels globally, and we've sort of anchored ourselves there. We get a particularly good panel, an all-black panel, very competitive pricing, huge aftercare and support services, very reliable time of delivery. We're not having to purchase those panels out of China and have them on the sea for 9 weeks. They have a logistics shipment department out of Rotterdam, and we're looking at a 12 to 15 days delivery for ourselves. We bring them in by containers to Green Tech, but it means that if some of our clients want containers or multiple number of pallets, we can very much enable them to our warehouse here in Ireland within 10 or 12 days. The types of other panels that we carry are the Seraphim panel, and historically we've carried JA Solar. So they tend to be our 3 main range of panels, but where we see the the huge growth, the competitive advantage, and I suppose the aftercare service that we can provide and the value creation that we can provide as a distributor to be primarily in the electronic end of things. As I mentioned, we have licensed 2 inverters. We have a very innovative hybrid inverter that is coming into the Irish market as part of the Solentech range. The hybrid inverter has been available in the domestic space for residential customers, but there's very little in terms of hybrid inverters in the 3-phase that is tried and tested. There are a couple of inverters that have been launched by other distributors, generally around a 10 or 11 kilowatt model size. And they're quite small. They have to be parallel ran, in that you have to put in multiple of these. If you want to get 100 kilowatts of hybrid inverters, you have to put in 10 of them. But we're bringing in a range of hybrid inverters that start at 10, go to 30, and go up to 50. And again, we have some very innovative programming of those. It's been done at site by manufacturers back in the factory and through requests by ourselves, that certain inverters that have the capacity to do up to 20 and 30 kilowatts worth of panels in terms of the capacity to be able to handle them and handle the load are being modified for us so that they are restricted to an 11 kilowatt output, which allows them to be connected immediately to the grids here by the ESB straight away on 2 weeks notice, to run up to 30 kilowatts worth of panels behind the 10 kilowatt connection to the grid. And as soon as the permitting from the ESB comes through at a subsequent date, allows us to reopen those up remotely using software to allow them then to export the 30 kilowatt capacity. So again, a few innovative products that I'm just conscious that obviously it's designed or focused primarily on trade people that have a level of expertise. So I don't want to get too technical at this stage, but hopefully, Niamh, that's given you a flavour. And as I said, I mentioned the microinverters are an area that we see a huge amount of growth and efficiencies in assisting installers to be able to install on a very efficient time-based scenario, rather than, you know, what's happening at the moment where 70% of all of the on-site installation time is involved in getting the electronic equipment into the attics or into the plant rooms. The next question that came up from Sarah there, Sarah had a couple of questions around the actual battery technology that's being used in Batterybox. What's the kilowatt capacity of the battery boxes and the cell chemistry? We're starting with a minimum battery size of 30 kilowatts. That's the sort of economic model that we've come up with. So 30 kilowatts to 50 kilowatt is the entry level there, Sarah. If you get to download the investor memorandum and the projections with that on our website, you'll see we generally start with a 30 to 50 kilowatt model. That is generally the entry level for a commercial. If a commercial customer has 11 kilowatts connected to the grid, we can bring in 3 or 4 hours worth of power into a 30 kilowatt model, and into a 50 kilowatt model, we can bring in 5 hours of power at night. And then we have 5 hours of power that's available to be used the following day. And we see the economics being primarily around the 250 kilowatt size. And as I said, through our strategic joint venture that we actually have with our UK party, we're looking at 1 or 2 large scale batteries of about 1 megawatt to 3 megawatt that we're putting in on some of our larger commercial PV customers, and we're trialing those as well. So as we return to the market, possibly next year, the year after, you'll probably see a gradual growth or change of generation where we're going to be moving to much bigger batteries. But right now, for the disbursement of tranche 1 and tranche 2 of the EIIS funding, we're in that 30 kilowatt to 250 kilowatt range. The type of technology that we're actually using in that is lithium ion. Lithium ionide. It's been the backbone of, I suppose, the commercialization of batteries over the last couple of years. And we obviously want to be using established technology, proven technology. Sarah also goes on to ask what the capital cost of the battery box is, all told, fully installed, around the 550, 600 euros per kilowatt. And the SaaS model, how does that work? She's asking what the capital cost of that battery is. How does the SaaS model work, and why is it an 8 to 9 year payback? I suppose her question might be raised there because of the concern around the 5 year life, the 4 to 5 year life from a EIIS investment point of view. The SaaS agreement with the customer is generally a 5 year agreement. It's called I suppose SaaS refers to solar as a service, but this will be a BAS model, battery as a service model. And the customer will put in generally a 10 to 20% deposit on the battery, and they'll pay the balance off over 5 years. And that's the BAS model, the battery as a service model, which will have a 5 year life. That will really tie in with the EIS investment, and it's the ideal model, and it's the model we'll be pushing primarily for the first 2 years. And again, the customers will be incentivized to follow that model because they'll have full ownership at the end of year 5. The second model that's referred to there, which is the PPA model that has a life of 8 to 9 years, this is a model where the customer does not want to get involved in buying the battery and taking ownership of it. We don't really see this in SMEs, but we see it on our larger industrial customers that are owned by multinationals, and we see them more inclined to have an O&M solution. So when I refer to the 8 to 9 year period, that's more an internal payback period for us. The O&M contract or the PPA contract signed with the larger industrial customers will be for a 15-year term to a 25-year term, generally a 15-year term with the battery, because it will tie in exactly with the number of cycles that's warranted. But when I mentioned the 8 to 9 year time frame, that was our own internal rate of return. We'll be achieving 11 to 12% on that battery. And we'll see that sort of year 8, year 9, the battery will be fully payback amortized. And from year 8 to year 15, those 7 years, we have free, undiluted income coming in from that source because all capital costs are paid off. So you have a much higher IRR or return on investment in the latter years. That's the significance of that. Looking to see if there are any other final questions coming in there. We have a question in from Brendan. Please, can you outline what updates investors will receive throughout the year on the financial performance? I then have Martin Condon saying, when you say 1.16 per share priority return, what do you mean by priority return? Okay, so just to come in on that, what you'll have is you will have on the website, you'll have our existing investor memorandum and copy of filed financial statements for the last number of years there, Brendan, for our company. So Batterybox and Green Tech will have their final accounts up there in your investor box if you go in and you get that there. We do traditionally send out an investor newsletter as well. It's generally timed to coincide with this presentation. So for our existing investors, and Brendan, you're one of them there, what we'll be doing is immediately after this seminar, we'll be sending you out this week an up-to-date investors newsletter on the company you've invested in for the current 9 months since the last year's set of financial statements, and you'll have a copy of the management accounts on that for year to date, generally to the end of September, the end of October, and a copy of last year's filed accounts. Can I clarify what I mean by priority return, Paul? Again, we can't have a priority return to anyone under EIS. We generally try and target a bonus at the end of the life, but a bonus for EIS purposes cannot be guaranteed. So a slip of the tongue when I speak about priority return, the likes of one of our funds that has been in repay mode with the SolarStream on the PV solar space has been paying back its bonus of 10% upon repatriation or purchase back of the shares. So when I speak about priority return, I speak about a priority bonus, but there's no guarantee around that bonus. So hopefully that has answered that question. Somebody has asked me there, are our new inverter providers, are the Enphase or SolarEdge? What is the motivation to source microinverters as well as string inverters? Again, we're getting a bit technical here. Somebody, Colin there, has a bit of knowledge possibly of the industry. So just to answer his question, no, they're not Enphase. Enphase are American-based inverters. They do have a 25-year warranty, but their ability to produce power is actually quite limited. The inverter isn't necessarily suitable for the size inverters being used in Europe. The inverter AC capacity tends to be 270 or 300 watts that it produces or that it permits out onto the grid. And the panels that we use are generally that 410 to 430 range. So you'd have much larger panels going up, Colin, than the actual Enphase microinverter could actually handle. So it's not the Enphase. The SolarEdge is an alternative microinverter. In fact, the SolarEdge tend to use a lot of optimizers. So it's an optimizer style model that's used there with electronic structures on the roof. But again, it's not that. And again, we're just tying down a key strategic franchise or distributorship arrangements on the microinverters. So I'm just afraid to say anything too publicly at the moment. But I mean, you will have information of that product going ahead. We're actually trialing 2 of these microinverter technology systems on a client's premises at the moment. They have 500 outlets in Ireland, and we're installing them on 2 of their outlets as a trial. And I suppose the huge efficiency of this column is that rather than an electrician spending 70% of the time getting all of the equipment up into the attics, or indeed on commercial premises into the back plant room, the microinverters are literally just put on the panels, on the back of the panels before they go to roof. There is immediate conversion to AC power, so there's no DC power coming down off the roof, and then trying to get the DC cable on various trays across to where the plant room is, where the inverter goes. So it's an on-roof enabled technology. We believe it'll bring huge efficiencies and timescale to the installation, and that is the biggest resource at the moment. Biggest constraint and resource is not so much the cost, but it's the availability of skilled electricians to do this work. And this allows a lot of the work to be done on the roof by roofers and semi-skilled teams, with the initial tie-in taking place by electricians. Niall Anderson has asked on the distributorship opportunity, how do you mitigate a data risk, high value products? Well, again, the nature of that, Niall, is a trading risk. There is always that risk, and we are working with a number of known PV installers, established significant installers, but you still have a credit risk there. Again, it's down to your credit policy. It's down to having pre-approved credit limits for those customers, and as they scale up, it's down to getting appropriate credit insurance in place around it as well. I believe the counter offsetting of that risk is the incentive that we're putting in place, where the actual installers are coming in as co-op members into it, and they have a rebate and they have an incentive to pay on time and to pay early and to work within their approved credit limit. How the industry has traditionally managed this is it has set small credit limits of 10 to 20,000 euros per customer to allow them to buy 2 or 3 units of stock, and they have to pay that off before they get further capacity. I have another anonymous attendee asking about the 116% rate of return, 16% return on funds. So hopefully I've answered that. That is a bonus payment. But if you're new to investing in EIS, you do get a 40% tax relief up front. So if you're investing, and I'm taking the figure 10,000 by way of example, if you're investing 10,000, you are getting 4,000 up front. So your net cost is 6,000. On that 10,000, if we're paying back 16% on that 10,000, we'll be paying back at 1,600 on that. So you'll be getting back 11,600 euros on your initial investment of 6,000. So your net of tax return is much higher than 16%. But again, there's nothing guaranteed in the space of EIS. It's all about creating realizability at the end of the term when investors want their money back. And hopefully the environment where we're creating an asset-backed structure, low-risk structure, will assist in that. I think that's all the questions I have there, Janine. Hopefully that's answered them there. I suppose from my end, I'd just like to thank you for joining us. We have a huge gang of attendees there. What we'll do is we'll get a copy of the recording out if you want that. And as I said to Paul, for any of his clients there, we're delighted to share that link as well. So thank you for your time.
Thanks everyone.